Bitcoin tapped $115,000 before dropping back below $113,000 and trading back to $113,000. I think it's fair to say Bitcoin is currently sideways while the world holds their breath, wondering if the government will shut down tonight. Last I checked, every single government shutdown in history has been followed by a government reopening. I don't know why we care. Don't know why we talk about it, but it's Tuesday and we literally need something to dive into. So we'll talk about that, obviously, price action and all the adoption of stablecoins. And of course, because I'm contractually obligated to tell you this, how awesome Arch Public is. Let's go.
Let's go.
I'm not actually contractually obligated to say anything, just so you guys know. But Andrew joked right before. I was like, hey, so like, should we bring up any specific trades? He was like, just tell him Arch Public's awesome. So I just went ahead and did it at the beginning. Your beard's coming back. By the
way, I wake up to that trumpet music every morning. I just want everybody to know that.
I wake my kids up to that trumpet music.
Yeah, the trumpet music is outstanding. Whoever chose that years and years ago, well done. Very well done.
I made that.
I'm going to assume, no, you did not. I'm going to assume that your wife created that or something.
It actually reminds me of the intro music to one of my favorite shows, Bosch. Have you guys ever watched Bosch? It's very similar to that. So I thought maybe
Bosch copied me. I was first. And I literally made that beat. It was a submission in my DJ production days for a rapper that did not get used, and I used it for my own show. So you're welcome.
So, by the way, things to talk about. The government shutdown is going to be another version of, oh no, something bad's happening, and 2 weeks later we've completely forgotten about it, right?
A nothing burger.
Yeah, we've weathered the storm of bombing Iran, tariffs. The world's coming to an end because Trump exists in one way, shape, or form every single week, and all of it just dead ends, and then we're on to something else.
We have the attention of goldfish. It's
especially on crypto Twitter. My goodness.
Well, how many times has this been the headline? I mean, it feels like Groundhog Day. It's been on repeat for quite some time now. I would venture to guess that even if the government shut down, to Scott's point in the intro, that they'll reopen. So
it's a thing.
I mean, like, what are we even talking about here? It really means nothing.
Right. Listen, the place that it might be slightly meaningful for markets, I don't think for Bitcoin, is the fact that one of the things that happens when the government shuts down is you don't get any economic data. So there's all these expectations of things happening this week. 5 Fed officials spoke yesterday. Yay. FTX will redistribute. That will happen. But like ISM manufacturing data will be released? No. Initial and continuous jobless claim data will be released? No. U.S. unemployment rate data will be released? No. So these numbers that everybody obsesses about and apparently makes huge financial decisions about at any given moment, not even going to get the fake data this week. Well, we all know it's not real, but we're not even going to get the fake data.
Not only do people obsess about it, but when it comes out, the market moves half an inch nowadays and just basically goes higher over the past decade. Anytime this stuff gets released, then it just goes higher. What are we at? The 27th or 28th new high in 2025 for the S&P like last week. And then we had a couple days where it dipped a smidge lower. So data or no data, the market just continues to march forward.
Well, new money's being printed. New money cycles to people. People have 401ks. Last time I checked, it was over 1% of daily volume is associated with just smash buying through 401k contributions. I mean, that's a rising tide. I mean, no wonder it goes up over time. Short-term volatility, mid-term volatility, obviously exists. But long-term volatility, I mean, it looks pretty up and to the right to me over the last 20 years.
Yeah. I'm just wondering how I'm going to decide my very spontaneous and spastic Bitcoin buying and selling decisions this week if I don't have job data to base it on.
Yeah, I mean, how can you?
If it's 200,000 and not 190,000, how am I going to know if I want to hold my Bitcoin forever or not? That's really the gist of it is like, just buy this stuff and wait.
So think of a guy like Joe Kernan, who's been on CNBC for like 74 years. I mean, does that guy ever wake up and say, you know what? I'm pretty much doing the same thing over and over again for a really long time. Is there any point where he wants to say on the screen, hey, most of what we say really doesn't matter. We'd like you to tune in, but most of what we say doesn't matter at all.
Is that self-prescribed here?
Noise. Yeah.
Most of what we say doesn't matter. So yeah, it's programmed, right? So as Tillman just said, the way that markets work and the constant, let's call it inflows that exist across the board and asset classes, we're even getting those inflows into commodities in a meaningful way now. Gold, silver, palladium, platinum, all sorts of weird things have been going up and up and up and up and up. Tillman's got a real cool story about his silver theories that he'd love to share here on this podcast today.
Oh, I'm not aware of this. A little spontaneity.
Oh yeah, a little alpha for the.
Tell me about silver, buddy.
For the audience.
Well, my dad has been a gold bug since the dawn of time, and he's been talking about gold like we talk about Bitcoin. Like, it's the inflationary measurement. We're going to see it's being artificially suppressed. It's real money, all those same narratives, Peter Schiff. So I grew up hearing that. And, one of the things I always heard was, number one, a gold coin could always buy you the best tailored suit that existed. That was like the measurement that over time, if you could hand somebody a 1 ounce gold coin, you could get the finest tailored suit in the world. Like, French.
Your dad hasn't seen a Brioni or a Brunello suit. Because...
there might be some catch-up there.
Go hit up Laura Piana and see how many gold tokens you need.
Notice Tillman's wardrobe. I don't know how many gold coins he's taken to it.
I didn't mean to interrupt.
Listen, do as I say, not as I do, Andrew. Listen, I spend my time thinking about these things, not doing them. Okay? So some of these like ratios that I've always heard. So if you think about it, $3,700 is what gold sits at today. You're right. You can't go buy the finest suit. You need 7-10x that to get the fine. So that's why people think gold has a lot of upside right now, is that it's been, for whatever reason, whether you believe it's been manipulated, which there has been a lot of fines and a lot of public court cases that have shown that it has been manipulated. But if you believe that it's been manipulated and it's been suppressed, it's sort of like what we saw with the Bitcoin growth from a development perspective during the Biden administration. Even if there was development happening, it was being suppressed and held back. Well, you have this big surge now in gold price, and it's getting everyone's attention. Well, the real story is that silver is traditionally, I've always heard, like 1-16 ratio to the price of gold. And we're like at 1-80, I think, right now. So not only have they both been suppressed and have upside, but they also have a disjointed, they have a relationship from a ratio perspective that's now very disjointed. So, if you like those assets, there's something to be said for, historical kind of the manipulation that's been happening over a very long period of time. And now that you wonder if we're moving to a new system, maybe that's why they're letting those controls kind of slip and the price go where it's going. But there will be, I think there's repercussions to that, right? There's a lot of manufacturing that revolves around silver production and using silver specifically, but also gold.
Yeah, Ethereum is just silver, right? Isn't it the whole narrative? I'm unmuting you, Andrew. Sorry.
It's digital.
Andrew and I are having an unmute battle.
Listen, it's silver versus digital silver. It's very, very different. We need to have Tom Lee back on the show, or at least on the little picture that we put up for the show. So he can I think of Ethereum like the Apple App Store.
it's a canvas, right? You can build so much off of it and have instant access to retail through it and rely only upon kind of yourself for the transactional throughput that you are calling for. And so it's one of those things where it's a competing network, but Solana is the same type of a thing. So, it's at the end of the day, pick your poison. And I personally believe, based upon the last few months and what we've seen, that they're all going to fail against the institutional layer ones that are launched, because they come with real volume and real utility, which means depth of volume will be greater, which means it'll be a liquidity flood, I think, to those assets. And I think there's probably some huge announcements this year as it pertains to real world companies adopting blockchain for their primary transactional utility or their set of rails.
Well, Chainlink and the whole Visa Swift thing that's going on. Again, there's going to be winners and losers, and if you haven't figured it out, once we get to the level where Wall Street is meaningfully interested in this asset class, they're going to end up picking the winners and losers based on what they use, based on what they approve to be used across their huge, customer bases. Again, Visa is a massive, massive customer base, hundreds of millions of people that are using those products. So what do they tack on, so to speak, from a tech standpoint, from a blockchain standpoint? And if it's integrated and how it's integrated is going to be a huge winner. Simply, it's an undeniable truth. So who wins those particular battles, right? There's been lots of narratives around Swift and other tokens that will not be named. But it seems that Chainlink has a leg up currently.
Yeah, I mean,
yeah, well, they do.
There you go. Just on that news, Visa's direct test stablecoins as cash equivalent for cash transfers, and there it is. Swift moves in with 30 plus banks to build 24/7 blockchain ledger for global payments. Seems like the outdated system from the 1970s is thinking, I don't want to be Blockbuster or Kodak. Maybe I should check this new technology thing called the blockchain.
I think there was never any fear of being displaced. I mean, the money is secondary to power. People don't think that, but it is. And I can show you a lot of people through history that had enormous amounts of money and power took it away from them. So power is, what everybody is after. And Swift is the power of the world. Like that is what all the money, that when you talk about all the money, when XRP people talk about all the money, they're talking about replacing Swift. I'm just glad that the narrative has finally become clear as it pertains to Swift will never give up that control. And that was my whole problem with the thesis of a Swift getting replaced by XRP, is that it required control. And it would require Ripple to have that control versus the traditional system. And I think that's a far-fetched fairyland in my opinion. But power and control is ultimately why we invest how many trillions of dollars into our weapon systems, and why we parade those systems by, flying them in parades over foreign leaders. I mean, like that's where we have gotten to from. Well, it's might. Yeah, exactly.
Yeah. So you're saying on record that Ripple will not replace the entire global financial system, and that those people will not choose to be displaced by Ripple. That's what you're saying?
I'm saying that they will never be the single solution for that. No, they may be some alternative set of rails that is used occasionally, but that's happening right now with Tron for cross-border payments. Just FYI.
I've got a tweet ready. Tillman Holloway says,
Texas OL 61 said.
Listen,
I'm ready to fire that off.
Listen, in true media fashion, that would be a false clip. There's plenty of utility behind XRP, and there's plenty of utility behind Ripple. There's just
also people just can't take jokes. Like, I'm literally making a joke. I would have made that same joke about one of my best friends or a family member or something similar to it. Like, we were exchanging insults that we were allowed to make in the 80s at each other right before the show that we could never say on the show. And I have privately been now spamming Andrew's Telegram with those just to see if I can get him to randomly giggle at bad times during the show, but it ended up with me laughing. Hey,
So,
go ahead, please.
Something that needs to be said, though, and it's not just, Ripple, it's not just XRP, but it's other communities as well. There is a world where those communities can build out their own, system and rails of financialization because their community's big enough already, right? They have the ability to do that. And, when Ripple gets a banking license, I think they will do that. I think there's going to be a world where there's, there at minimum, there's tens of millions of people that are just, XRP believers, right? So why not build out your own version of that? And it's a meaningful entity, right? If you've got 50 million people using Ripple as a bank, XRP is blah, 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 whatever it happens to be, their stable coin to move money back and forth, that's bigger than every single regional bank in the United States, right? The biggest regional bank in the United States has 30 million customers. You've got 50 million people transacting across just that blockchain and that system. It's the same thing with Solana, same thing. So we'll see how it evolves. But I think there's going to be, alternative systems to just either blockchain or traditional banking.
I agree. Well, there's a hybrid there, but private database and kind of the hybrid systems, I think, are going to be a big deal. And I also think, to your point, I think there's going to be what we in the traditional side have referred to as hostile takeovers. I think that's going to happen on the blockchain side. I think there's enough, like you said, community support that can be garnered behind some of these projects, that if you wanted to essentially take liquidity off of a project like Pepe, for example, and I'm not a Pepe holder, but they've made a ton of money. I don't know how much money, but like
lots,
billions and billions and billions of dollars. So let's just say, hypothetically, they all got together as a community and said, you know what, we're going to do this again. And we're going to do it with Pepe 2.0. And then we're going to do it again with Pepe 3.0. There's nothing that legitimately could keep that liquidity from rolling and creating those self-fulfilling prophecies, because the depth of liquidity that we're talking about here would attract new money, a lot of new money. And so, it's like, who can master the art of providing critical mass to these projects to the point where they do have staying power? I mean, if you look at like Trump coin and you look at what's happened, Trump has staying power. There's no doubt in my mind at some point in time, we're going to see some positive movement there. The question is like, how can you keep it there like you have with Dogecoin? And that's just like strength of community and conviction of cause. And so when you see real world brands like Disney try to inject their real world conviction into the blockchain, it's going to be interesting to see how much I think we talked about this a couple of weeks ago, or maybe not, but like collectibles. Think about how rabid and crazy people are for collectibles right now. They pay exorbitant amounts of money for Pokemon cards and all sorts of.
Never seen a Bored Ape?
Yeah, exactly. Bored Ape. And so you transfer real world value into that type of sticky ecosystem that has financial rails, and holy smokes. Like I right now, I think there's I find this interesting, maybe y'all don't, but there's actually a fund out there that's buying Bored Apes and buying CryptoPunks. No, CryptoPunks. And they're just buying the floor. So they just raise money basically, and then anytime one becomes available that they consider the floor, they buy up the floor. And what's happened is that if you go look at CryptoPunks, even through this horrible depressionary phase, well, they're like 220 grand.
They've never lost value against ETH. I shouldn't say they've never lost value, but as their benchmark. Yeah.
So you're just going like, you know what? If people have that much money that they're willing to park in that asset, one would have to assume that real world, brands that have goodwill over 100 years of service could garner a huge multiplier.
Well, back to moving beyond Bored Apes, over the next month, we're probably going to see about 50 approvals on the ETF side for all sorts of crypto assets, right? Just name one. Throw a dart at the crypto board, and you're going to get an ETF over the next month. Yeah.
Fartcoin ETF.
Yeah.
Which, by the way, Fartcoin is faster and cheaper to send than XRP. Discuss. I'm just kidding. Go ahead.
so that again, the inflows into all that stuff, and we've discussed it several times on this show with Bitwise guys, that over time the leading quote unquote inflows is going to be a fund that has a basket of the top 10 tokens, right? Bitcoin, Ethereum, Solana, all of them. And so you'll end up with a Dow 30 of cryptos that will just consistently get enormous inflows. I think that's really the reason and the thesis behind. We've gone through cycles before where both Bitcoin and then altcoins, slide up significantly and quickly, and then they move down just as quickly and significantly. That hasn't happened in this cycle. It just hasn't happened. We're at 113 and change, which is about 8% from the all-time high. Altcoins, I don't know what XRP or Doge is at right now, but I know versus other cycles, they're significantly closer to their cycle high than they are to their cycle bottom. There's not been meaningful movement to the downside after they've seen pumps, and that's because there's an understanding that there's additional liquidity that's coming to the ecosystem, and it's going to be different and significantly more than the ecosystem has seen in its life cycle. And that means that prices are going to remain elevated. To those that started in this space from 2015 to 2017, there's just a new paradigm, right? Yeah.
The 1% buying tide, it's the rising tide floats all ships type deal.
Yeah. Do you want to see a story that just dropped that's going to amaze you?
Yeah, go ahead.
This person, first of all, how old do you think she is?
41.
52.
Okay, she's 47. I had her at like 78.
Yeah, she's got some gray hair up there for sure.
I don't know, but she looks unfazed. But she just had 61,000 Bitcoin seized. 61,000 Bitcoin seized, and they're like so far from some sort of like Ponzi scheme she ran under another name in China a couple of years ago. 61,000 Bitcoin. Okay, we don't even need to talk about it. I just couldn't.
My mind quickly goes to jokes that probably would not be well received.
My mind goes to that this is what we want, right? What we want is this market to continue to consolidate. And I would hate to have 61,000 Bitcoin in the hands of her, right? And
we don't even know her name. She has a lot of them.
Yeah, well, I just know that there was an era in Bitcoin where, there was, I think, a lot of scams, a lot of frauds, and I think the industry itself is cleaning up. I think a lot of the Wall Street value that's being added is some stability to the markets and not such a wild, wild west mentality. And, that was one of the things that when the hack with, I can't remember which exchange, but the big Ethereum hack that they pinned basically on Bybit. Yeah. All that money they just kind of chalked up to being lost. Well, but it went to the hands of very bad people, and bad people that have a lot of money do really bad things. And so I think there's an opportunity here because there's been such a bad rap that's been put on crypto around these types of things. But people actually don't understand that cash is a lot less traceable than crypto. Crypto adds an advantage to enforcement agencies in tracking down criminals and recovering assets. If you can't say the same thing for cash. Like most of the time, criminals that have lots of cash, you never recover it for the victims. Crypto, you see a large recovery rate if you are able to do that. And so I think there's a positive narrative here that is a teaching moment kind of for the world. I just don't think anybody's grabbed it and really, made the message loud and clear so people can hear it and it can resonate with people.
Next story, UK government offload 61,000 Bitcoin on a Sunday in a single sell order.
Yeah, and 2 years from now, it's worth 4 times what they sold it for.
I love it. Keep selling to us. We need as much supply out there as we can get. Yeah, exactly.
By the way, back to my point about altcoins not moving meaningfully lower. The opportunity right now and probably over the next 18 months to quote unquote trade altcoins and turn it into probably significant amounts of Bitcoin has never been better. It's just never been a better opportunity. I know that's been something that is a tried and true strategy across crypto Twitter for a fairly long time, but it's never been better than it is right now. Again, because there's a floor underneath everything, so your risk is different. It's not necessarily mitigated, but it's a different version on a percentage basis of risk associated with making that play. And I think it's worth talking about. I think it's worth doing everything you can to execute that strategy. We're 28, 29 minutes into the stream, and I haven't mentioned Larry Fink yet, but I'm going to right now. Given his 500 to 700K number, you should be doing everything in your power to put as much Bitcoin on your personal ledger as you possibly can. And that particular strategy over the past 8 years has worked really, 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 really well.
It's like, where do you enter a market? Do you enter it prior to being adopted, which is like prior to Wall Street in the last, I'd call it 18 months, or do you enter afterwards? No one talks about these numbers, but the global market cap for our industry is right at $4 trillion now. That's a lot of money. That's not that we've graduated into what I would call the largest poker table in the room, the one that has the most chips, global finance at a Wall Street level, but we're still the smallest asset class within that, at that table. And so there's just so much upside. I think that if you take a step back and go, what's gold's market cap? Oh, well, over 20 trillion by itself. And you're saying that the entire crypto market is less than 4 trillion, and that's not a value play. I think you're right. I think we're going to see, how big the pumps we saw in the past when quote alt season arrived was always predicated on how big the Bitcoin pump was and the money that filtered into those altcoins. Now think about, as Bitcoin's market cap expands, that's incrementally more force being applied to the altcoins because Bitcoin has expanded in value a lot more than the altcoins have. And now it has Wall Street money to expand into. So there's just this massive multiplier that could be had in the altcoin season if we see a continued rising tide of new liquidity coming into the market in the form of Bitcoin. And then people profit, taking and again, to your point, investing in assets and in baskets of assets that give them broad exposure to this $4 trillion asset class that I think in a lot of cases people think is going to be a $50 trillion asset class in the next 10 years. And I wouldn't argue that. I actually think that I think the baskets themselves aren't going to look the way we think they're going to look. I don't think we're going to have a bunch of crypto projects in there. I think it's going to be a mixture, no different than when stable coins were created. They creeped into the top 10. Well, if Disney launches on a blockchain tomorrow, I promise you they're going to be in the top 10 very quickly.
Yeah, because of Kimmel Coin. Fire.
But the point is like, I think that board's going to look really different, but I do think the altcoins are going to have I think they're going to have the biggest pump that they've ever had. I think that's basically
and Andrew, if only there was a tool.
If only there was a tool. And yeah, so here's the thing. Actually, take that away and pull up a chart of like Doge or Solana for us. Okay. So this goes to Jeff Park and his radical portfolio theory. By the way,
Solana on the weekly. Do you want to?
Yeah, I mean, seriously, look at that volatility, right? So that volatility in and of itself, if you're able to volatility farm, there's there's 10% on 10% on 10% on 10% that you're grabbing using tools and strategies that allow you to grab that and then shove it into Bitcoin via an intelligence apparatus and strategy that you can use with Arch Public. Point being is that radical portfolio theory says that you should engage in almost degenerate type of projects that are volatile, because if you can go grab that volatility and use it to your advantage, you are so far ahead of the masses that they can't even see you, right? It's like, the guy that wins the marathon runs it in 2 hours and 45 minutes. Everybody else runs it in 6 hours. And so the difference is so vast that it's hard to quantify. So same thing here. If you're able to grab volatility and it makes a meaningful difference in the size of your Bitcoin stack over the next, let's call it 2 years, you're so far ahead of the pack. It's difficult to quantify.
Well, and it's an and both, right? The whole point of investing is to cover different time periods with different strategies. So you have broad coverage and you have diversified interests and you have capital placement that's diversified. And so when you're talking about Arch Public's tools, we're going to show you, if you want to use the tools, how to use them to harvest volatility, for example. And if you are sitting there going, well, what does that even mean? We're a great place to start because we'll teach you. And before we had automated tools at our disposal, the reason why we built them was for this purpose. We wanted to have trigger events take place in the middle of the night that we weren't posting on order books predicated on price. We wanted it to be predicated on market movement, percentage movement, volume support, all these indicators that were more complicated than just a limit order that you could throw up on exchanges. And we wanted something more intelligent than just a standard dollar cost average that's offered on all the exchanges of buy every Tuesday at 9 a.m. Well, what if Tuesday at 9 a.m. that you're buying on is a giant green candle? And then you just go back to market theory and you go back to what all of the prudent educators in the space talk about. You should be buying when everyone's selling, and you should be selling when everyone's buying. And our tools help you master those concepts and keep you accountable to those concepts. And we have these kind of conversations like a lot of our customers, and we didn't think this way either before we had these tools, which is like, okay, let's say you're highly allocated. Let's say you have a ton of Bitcoin. When do you want to start scaling out? Do you want to scale out after you've seen the blow off top and you're trying to sell into giant red candles as it comes down? Or do you have a methodical scale out strategy that's allowing you to harvest the volatility on the upside as you're reaching, that blow off top? And so without thinking like this and without having the tools that you can set it and forget it, those become incredibly difficult to manage manually, like incredibly difficult and highly emotional, stressful, time consuming, all of the above. So our tools are built so that you can have all of those disciplines be written into your parameters. It's all user driven. You keep your money in your brokerage account. It integrates with Gemini, Kraken, Coinbase, Robinhood, soon to be OKX. All of those things we're doing to try to prove to people to use automation will make your trading life more fruitful and give you an advantage and a freedom that you've really never experienced before. So come try it, and we'll show you how to use it for whatever purpose that you have, whether it's accumulating, whether it's trading, and harvesting upside across broad, very highly volatile cryptos, and then putting that into Bitcoin, or whether it's scaling out of a position that you've accumulated over the last 10 years.
I've had a bunch of people asking in the comments because we talked about it last week. I'm doing my onboarding for my new account, today. We're going to record it. Mm-hmm. If it's not too embarrassing for me, then we'll probably release it. But yeah, so I set up a whole Robinhood account, fully funded, and I'm going to get this running, and we're just going to show it every single week, as I said. And we'll also show the process of setting it up. And I'm going to be pretty much hands off and take the best advice I can from these guys on the best way to maximize. And to be very clear, once again, which I will say every time, my goal isn't to see my portfolio go up in dollar value. My goal is to get as much Bitcoin for the amount of money that I've put in as possible.
Well,
So,
and
so my benchmark is dollar cost averaging on a Tuesday at 9 a.m.
Yeah.
Well, here's the inevitable things that are going to happen. The price is going to go up, it's going to go sideways, or it's going to go down. Those are the three options. So if it's going down and you are accumulating, which you just said is your primary goal, you're going to be accumulating on all the big dips. And that's how you accumulate. Your cost curve is going to be a product of buying the dips over a long period of time, which is that's how you play the volatility to your advantage on the downside risk piece. Then let's just say the price is trending and you have the arbitrage strategy at trigger points of -2% and +2%. Well, as the price goes up and down, you're having trigger events that are taking profit off the table, and you have trigger events that are adding more to your position. So you're getting a byproduct of, if there is upside volatility, you're making some money on that. And if there's just downside volatility, you're accumulating at the best cost curve, and your accumulation is your primary goal. So again, only positive outcomes. And then if the final outcome is if the price is going up, you're going to be selling always in profit as you're unloading those profits. And managing upside volatility and managing profit taking, I believe, is just as challenging, if not more challenging than
the harder part.
That's the harder part, right? And so you can build these rules in and just set it and forget it. And no matter what the market's doing, you're achieving what you've set out to do. And you can dial those variables in: number of dollars being placed on the buy and sell side yourself, number of percentage threshold that needs to be met for those trigger events to take place. So it's completely customizable and user driven. And I think the first place to start is just download the free version and start using it, and call our team and get on a Zoom call with them, and they'll teach you how to use it. And I think that will spark a fire in you, and you'll see something that you've never had access to before, and it'll get you excited for what the possibilities are with it.
At what time did we hit 115K today? 6 a.m. or something?
Yeah, something like that. And here we are.
Something like that, right? So
yeah.
That in and of itself, there are millions of examples of price action in the crypto markets where, unless you're an Adderall fueled Sam Bankman-Fried, there's no way you're catching these ups or downs. There's just no way. It's impossible. It's happening at Saturday morning at 4 a.m. There's no way you can do it. It's physically impossible. So you have to have tools, right? You absolutely have to have tools. And these are tools, again, that have been used by institutions for 40 years in the traditional financial markets. They have not been used and are still not meaningfully adopted in the crypto space. The crypto space is still filled with 90% folks sitting at their computer thinking, should I buy Doge or should I not buy Doge? Because I don't know, somebody said something about it. Kramer said buy everything, and so maybe I shouldn't, but then the Sailor's buying stuff. What should I do? That narrative just right there is reason enough to use these tools. And
well,
if you have a plan, like, the plan that Scott's going to institute on Robinhood later today, right? Solana and Ethereum volatility that is then moved into several instances associated with acquiring more Bitcoin. Let's see how that works out, because I'm certain it's going to be meaningful outcomes for Scott and his portfolio.
Yeah, the only question actually is I know it beats dollar cost averaging. The big challenge is always what if I took all my money and bought right now?
Well, here's the thing. You'd either be really right or really wrong, or somewhere in between. The same three options exist based on where the price goes. Here's the problem with that theory, though, Scott. Unless you can lose that money, that is something that you shouldn't do, right? Because if you smash buy in at one price, you're betting on that price being the bottom. And if you're not, then you probably should keep some powder dry to start to accumulate as it approaches the bottom. So you by placing a smash buy bet or trade, you are lying to yourself if you're not choosing that as the bottom, because your actions are exactly that, right? So if you think you can choose bottoms, more power to you. There's a lot of people that live and die on that sword. I don't particularly want to. I think that when you want to own an asset, the most prudent way to own it is to space out your capital as far as you can apart from each other, so you have a healthy sample of time and price exposure for that asset. And then you didn't pick one point to be right on. You picked a blended curve to be right on, and you're always buying into that curve. That's what all the big players do. If you talk about, if you talk about,
so it's that 1.6 billion in FTX stablecoins that's coming back today is all going right into dollar cost averaging.
So that's the point with a guy like Paul Tudor Jones. Paul Tudor Jones has not done what you just said, Scott. He hasn't said, you know what if I'm right and I pick this moment right in time and I put half of my assets into Bitcoin and then I'm right for forever. Like that's not what those guys do. Those guys scale into positions. They hold those positions. They scale into more of those positions. They keep doubling down on being right once they know they're right. And there's more scaling.
By the way, a lot of that is averaging up for people.
Yeah, absolutely.
Right.
Yeah.
You cut your losers off quickly and you let your winners run.
Right? Listen, the most powerful and long-standing digital asset treasury company has done it exactly the way that we just said. It's strategy and Michael Saylor. He had a belief. He started with that belief by taking profits from his company and putting it into Bitcoin. And as that belief and that position grew, he moved more profits, everything that he could possibly do into that position, doubling down. So in a lot of ways, by using our strategies, you're your own little mini version of Saylor. You can use other assets to then take that money and put it into Bitcoin. And if that's where your conviction is at, we have other people that their conviction is Ethereum. We have other people where their conviction is XRP. Our tools, though, will allow you to use other assets to double down on that conviction.
You don't care where the volatility is. Play the volatility. You set the traps. If the volatility happens, you catch food, right? It's just as simple as that. And one of the things I will say about Michael Saylor, you're right in the fact that it's going to, if you look at Michael Saylor's chart, right, where he's got all the orange dots on it, he's smash buying the tops and it still works for him. Yeah. That's how powerful Bitcoin is. The reason why he's smash buying the tops is because he gets more debt leverage. He can borrow more money at the tops of Bitcoin's prices. You'd actually be doing better than Saylor because you don't get an advantage of buying on the tops. You should be doing the exact opposite of him and buying on all the dips. And so that's essentially what these tools allow you to do, and not sit there and have to monitor the market.
We should get a better cost basis.
Tillman, can you talk about our new product line? There are three very, very important points about the new product line that we're launching tomorrow inside of Arch Public.
Guys, don't tell me anything.
Yeah, so you're going to be using this in a meaningful way. Tillman, why don't you go ahead and talk about that? There's three really, really important points. It's our Oracle protocol, so it's an entirely new product line. By the way, all of our current concierge program members are going to get this just added to their portfolio. It doesn't cost anything. So if you're a concierge member, you get serious stuff, quote unquote, for free. But Tillman, talk about the new product line and what it means and those three meaningful principles that make it remarkable.
Yeah, I don't think we have time to go into all three, but let me highlight one of them specifically that's exceptionally powerful. And if you've used our arbitrage algorithm, you know that you can set if-then scenarios on both buys and sells. And what that looks like is if the market goes up by X%, buy this much of this asset. If the market goes down by this much. So you can literally program in exactly what your buying preferences are. One of the things that we have built and what we wanted to focus on is a adaptation to volatility in terms of sizing a position. And what we've done is we've allowed now you to set not only what the algo will know what your cost basis is, and you've checked the box that says don't sell below my cost basis, that keeps the trigger events from taking place below your cost basis. But now we've actually added an entire feature set that lets you say, okay, I want to put an artificial cost basis in. I want to make my cost basis 30% above my true cost basis. So now you're expanding the opportunity for profit taking, and you can say, okay, I want these if-then scenarios. I want this arbitrage, this volatility harvesting tool to be set on 1 hour time frames, 4 hour time frames, 1 day. You can set it across the entire board. So as those charts and as those time frames trigger, you're getting those trigger events. That's an incredible way, as we discussed in the past, where you're accumulating on the lowest cost curve that you can on that specific time frame. What's powerful about this is that now you can almost say to the system, okay, I've done a great, we've accumulated. And let's say you believe the market top on Bitcoin's 250,000 today. Well, you can say, I don't want to take any profit until after 250,000. So all that accumulation is now stored energy. And when it reaches that $250,000 mark, all those trigger events that you've programmed in become possible. So let's say the price goes above 250,000 and you have a trigger event on the 1 hour time frame that says, I want to sell $5,000 of Bitcoin if it goes above 2%, it goes up by 2%. Well, now that it's above 250,000 and it's gone up above 2% on that time frame, that trigger will take place and you'll harvest, you'll take profits on that $5,000 that you trigger out. So it's a way for you to customize your exit in real time with one simple measure and metric that adjusts all of your strategies behind it, so that essentially you don't miss out on cashing out before the top.
Sailor pushed the never selling button. He was like, price for all your sales, never.
Yeah. Well, when you're
the meme of the guy with the two buttons, like sell at $1 million or never.
Yeah, and he's doing this.
If he ever started selling, he'd never get the MNAV that he's gotten again.
Yeah.
So
it's part of his marketing pitch.
That's right. It's like, if he ever violates that rule, his MNAV range will be greatly reduced. And so he commands a premium because of that standard that he holds. And he's not going to lose that, in my opinion.
Again,
but that's not everybody. He's buying with everybody else's money, not his own.
it can't be understated that everything that Tillman just described, again, you're working with our team, setting those levels. And once they're set, you don't have to do anything else. You don't have to do anything. Go live your life. Go do stuff. Go, do a weird podcast in a lounge somewhere. You don't have to worry about making these moves yourself. It all happens without you being hands-on at all. So, in my mind, I think to myself, I never want to sell any Bitcoin, in that scenario until we're at 150. And then I want to kick back in the true arbitrage stuff. And there's other stuff that he hasn't talked about that's involved here on our new product line. But that allows me to continue to build a massive base underneath 150, right? So just, again, extraordinary innovation at Arch Public in what we do and how we do it. And I'm really excited to watch Scott get set up with Robinhood, and for him to see, for me to see the excitement that he comes to us every other day and says, holy crap, this happened with this happened with that. I'm going to post this today because this is incredible. This is awesome stuff, right?
I'm just going to post every buy, sell, order,
whatever.
Just like the whole idea here. Is I obviously believe I'll make money, which is the number one point. But B is we've talked about it for so long. We started with a transparent portfolio. I wanted to do it with Robinhood, so I waited because I like my friend there. And like now everybody can just watch. It makes it a lot easier to talk about when we're like, this is exactly what happened. And listen, there'll be times when, like, with anything that's trading, we'll be like, damn, this is going down. It's going way up. Should I, you know what I mean? We're going to talk about it in real time, what's happening. But you'll see every single order. I'll share them all. We'll show you every single portfolio. And money is where my mouth is. It's going to be a lot of money.
The most common thing that we get from a response perspective from our customers is this has changed the way that I look at the markets. I actually celebrate the dips now. And celebrating the dips is not something you do when you smash buy, right?
Ron,
I love it. Ron,
I didn't know the Rocco rotisserie oven.
oh yeah, he was the best. Yeah.
Yeah, anyways, go ahead. Sorry. It's the
Um,
slap chop of crypto. Okay, yeah.
No, I can't even remember. I lost my train of thought thinking about Ron.
Gotcha.
Harvesting the volatility in the market. You just ask yourself this question: am I harvesting volatility? What am I doing to harvest volatility? And if you don't have an answer for that, come see if you like the answer we've created, because it's free to use. And all the things that we just discussed, there's no watered down version of the platform. Anyone who's looking to invest in crypto less than $10,000 a year, or call it $800 a month, our product is free for you forever. You come and use it, talk to our team. They're going to spend as much time getting you set up and getting you up and running. And the whole point of this is to make owning crypto, trading crypto easier. And to alleviate the burden of the emotional swings and the time commitments that are attached. So,
how much you starting your account with, Scott? We're figuring that out with the ideal way, but probably I don't know if there's a use to putting Bitcoin in it. We discussed that, but I'll probably throw in like one Bitcoin and like $100,000 to start, and I will inevitably be adding to that. I can just tell you, because this is going to become my entire Bitcoin accumulation strategy, basically. So I obviously am a person who likes to buy Bitcoin, so it's good. It'll be more, but that it's taken me a little while to get money into Robinhood, to be quite honest. So but it'll be a few $100,000 in total to start, and I intend for it to be a 7-figure portfolio as we continue on.
Listen, a shout out to Robinhood. Their ability to be quick on the draw when it comes to customer service issues, communication issues that pop up online. I saw Vlad himself, CEO of Robinhood, responding to some things that popped up yesterday associated with some activity inside of Robinhood. Just really, really, really responsive, thoughtful, innovative guys. I mean, they announce something new darn near every week.
Well, they're the perfect balance.
And they're the biggest things. It's like, hey, we're a bank now.
Yeah, exactly.
Yeah.
Hey, we're matching your 401k.
You can buy tokenized stocks everywhere on the planet. Whatever.
They are the perfect balance of having critical mass and having enough power to control markets and to buy competitors and expand territory, infrastructure, all those things. But then they're also extremely nimble, right, to make adjustments and correct course and all those things that are required when you're running a business.
How about this taxable account? Last time I checked, I live in the United States. There's no such thing as it will not be in an IRA if that's what you're asking.
Yeah,
it's taxable. Trade sizing, longer or shorter term accumulation. I guess we'll know soon. I guess I'll know soon. So listen, I have parameters in my mind that I would set up for something like this. But the idea here is to allow Arch Public, using my portfolio very publicly, to show off the way they would.
Well,
it doesn't mean it will be the best, but like we're going to use altcoins to harvest volatility to get more Bitcoin.
Yeah, well, we're going to use the historical performance over the last 3 years and use those settings to set it and forget it and see what happens from a harvesting of volatility and accumulation perspective. And that's really what the two goals will be. You putting $100,000 in cash and 1 Bitcoin is great, because those are the two high water marks, right? And we'll see the reallocation based upon the volatility of the market between cash and Bitcoin. And what you're going to see in a really choppy market, you'll see the cash balance grow because you're harvesting that cash. In an accumulation phase, you're going to see your Bitcoin stack grow. And in a if you see the market go up a lot, you're going to see more cash also because you're going to be having
my problem is going to be like we're going to use a bunch of altcoins to harvest volatility, and I'm going to be like, damn, maybe I want to keep some of that sweet Solana. Like, what are we doing here? You know,
you just have to have conviction over the long haul.
Well, you can set up arbitrage that's 1-to-1 buys and sells. You can set it up as 1.5-to-1 or 2-to-1 on the long side. You're still harvesting volatility, but then you're also building a longer term deal, right?
Fritz, that's what we're doing for the comment down there. Is it possible to show a demo on this channel? So we are going to literally we have no high-end content plans. We're going to hit record on my onboarding call today for the 30 minutes or hour it takes to get set up. And then I'm just going to put my portfolio on the screen every week.
Yeah.
And I'll share, I'll be like, it did this, this, and this. We can talk about it. And you'll just see how much the portfolio is. There's nothing that I'm going to transparently share exactly what it's doing and where it stands on a week-to-week basis.
The best thing we can do is get people to experience automation for the first time. And that's what the goal of this exercise is, to boil down that process in such simple terms that you're going to say, I can do that. And you're going to try it yourself. So yeah, we'll be raw and we'll show you the entire process top to bottom.
All right, we got to go. It's 9:58. You can check this all out at archpublic.com, obviously, because you got to go. Yes, I am already a customer, just not of this product with Robinhood, just for the record. Okay. And yes, I know it's very confusing. I wanted to do this specific thing with Robinhood. That's what we're doing. We already had the other portfolio that we've been sharing. And it, by the way, is still very well up. And I would just like you to know before we go, Tillman, that you can buy a suit for $778,290 from Stuart Hughes. No, gold has a long way to go. And the cheapest of the top 10 here is 25,000. That's a Bijan suit, which are very famous. You go into the guy died, but that's in Beverly Hills. I kind of like the Vanquish suit because it comes with an Aston Martin.
No gimmicks. I think that 25,000 is a fair suit price for
Brioni suit. A really nice Brioni suit is like 12 to 15 grand. Just to give you a where like gold needs to be. We need to we need 3 to 4x
from here. Yeah, exactly. Yeah.
Like, of course, you can't say that like gold can buy you a suit that's studded in gold.
No,
it doesn't make much sense. All right, guys, that's all we got for you. Yet another amazing Tuesday here where we filled an hour talking about nothing that was actually in the news on the news show. So good. We will be back, of course, next Tuesday, and I will see you guys tomorrow. Thank you, gentlemen.
See you guys.
Yo.
If your mobile number was stolen and your passwords were reset, would you even know it until it was too late? Your crypto wallets, exchanges, email, bank, cloud accounts, gone because someone took over your phone number and hijacked your two-factor authentication. This is called a SIM swap attack, and in the crypto world, it's one of the most devastating ways to get hacked. It's not rare. It happens every single day. That's why I've personally been a customer of Afani for years. In fact, I've been with them since before it was even called Afani, when I was the victim of a SIM swap and my friend Charlie Shrem introduced me to the CEO and founder Haseeb. I trusted them with my security first, and because I believed in it so much, I later became an investor in the company as well. Afani is built to stop SIM swaps, protect your privacy, and back you with $5 million in insurance just in case. They even include complimentary international data roaming so you can stay secure but also stay connected all around the world. Top crypto investors, traders, influencers, public figures, and financial institutions use Afani because one attack can be so costly. Afani is offering a discount for our community, and to learn more, go to afani.com/Scott Melker to get a secure mobile service with peace of mind. That's EFANI.com/SCOTTMELKER. You can also find the link in the description and show notes. In crypto, security isn't optional, it's survival.